On today's episode, we are going to take a look at 4 EV stocks that have taken a huge dip since their all-time highs. These 4 are all hitting different markets, making different types of EV vehicles, and may I say 3 of these are super popular. I'm sure many of you have heard of them, but one of them is one that I feel doesn't get enough recognition for its name, and it's doing amazing. It's probably one of my favorite EV stocks at the moment. So today's episode, we are going to take a look at their fundamentals. We're going to take a look at future growth. We're going to do a quick overview of their company's website to see what type of products they have for the public. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch, where I live stream taking a look at stocks you want me to look at. So let's get started. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done some crazy returns. If growing your money is something you'd like to do more of this year, you can visit thefool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now back to today's episode. All right, so the first stock we're going to take a look at is Tesla. This is ticker TSLA. Right now, it has a market cap of about $646 billion. In the past 6 months, it is down at about 23% from its all-time highs. It did have a nice rally yesterday, and it was up about 20%. But we can see from that all-time highs, there's still plenty of room to go. So for those that don't know, Tesla has 4 main vehicles right now. 2 SUVs and 2 sedans. They have the expensive model and more of like the economical model. They have the Model S, they have the Model 3, they have the Model X, and they have the Model Y. If we take a look at their most recent quarter, they produced about 180,000 vehicles, and that was up 71% compared to the same time last year. So this company is making a lot of cars already, and they're selling them. Their revenue was up about 46%, I believe, compared to the same time last year. So we're seeing a growth in production. We're also seeing a growth in total revenue. Tesla's future growth is expected to grow 24.1% on average for the next 3 to 5 years. So this is a growth stock for sure. Right now we can see revenues increasing. We can also see this company is profitable, and they are positive in cash flow from operations. If we take a look at their balance sheet, they have a nice amount of debt, but they have plenty of cash behind. And remember, they are profitable, and they're also positive in cash flow from operations. The second stock is probably one of my favorite stocks right now, and this is NIO Technologies. This is ticker NIU. It is traded under the NASDAQ, and it's currently sitting at about $38.50. It has a market cap of less than $3 billion, 2.88, and right now it is down about 22% from its all-time highs. It did have a great day yesterday with the rally. It was up about 25%, but we can see it's still down from its all-time highs a nice amount. So NIO is mainly a Chinese EV vehicle, and it's not to be misunderstood by NIO, the EV cars. NIO, in other hand, sells EV scooters. They have all different brands, from the NQI, the MQI, and the UQI. Most of their sales are in China, but they are expanding outside the world to Europe, South America, and even North America. So revenue for this company compared to the same time last year grew 25.3%. So it's a nice growth stock. The number of e-scooters sold this recent quarter was 150,000. Most of them coming in China, which was about 138. The others came from international market. So 150,000, that means this company is producing a lot of vehicles. It's almost there at the same number of Tesla, yet it has a valuation of less than $3 billion. NIO right now is expected to grow its revenue 35% for the next 3 to 5 years, a super hyper growth stock. They are profitable, and they are positive in cash flow from operations. If we take a look at their balance sheet, they have plenty of cash compared to debt, almost 10 times more cash than debt. So that's pretty great. And like I mentioned, this is probably one of my favorite ones right now. The third company we're going to take a look at is NIO. This is traded under the New York Stock Exchange as ticker NIO. And yesterday it did have a great day, up 17.4%. But it's still down about 34% from its all-time highs. So that is pretty insane, right? How we've had such a strong downturn, and even we've seen this rally, we're still nowhere near from those all-time highs. And it doesn't mean we're going to get those all-time highs anytime soon, but it's just a good place to see how far we have fallen. So NIO is kind of very similar to Tesla in form of vehicles they have, except NIO is stronger in China. So they have, for example, the ET7, which is a sedan, the EC6, which is more of a SUV, the ES8, which is another SUV, and then the ES6, which is again another SUV. So they currently have about 3 SUVs and 1 sedan. If we take a look at their most recent quarter, they made about 18,000 cars in deliveries, which is not that bad, right? It at least has cars on the road. They are actually delivering vehicles, but this is nowhere to the extent that Tesla has. This is nowhere to the extent that NIO has. Total revenues for this company are up over 133% this quarter compared to the same time last year. That's because they are ramping up production. They did over 100% more vehicle deliveries this quarter compared to the same time last year. So this is more of a EV stock that's kind of starting out. They're already producing and they're kind of scaling their production as time goes on. NIO's revenue is expected to grow 30.4% on average for the next 3 to 5 years. They are not profitable at the moment, and they also don't have positive cash flow from operations. But their balance sheet is pretty strong. They have plenty of cash compared to debt. Again, this is probably the first company we're looking at that is not profitable or cash flow from operations. But again, it is in a different stage from Tesla. It is in a different stage from NIO. Next, we're going to take a look at the final one, and this is Churchill Capital, ticker CCIV. This is a SPAC right now that is going to go merge with Lucid, and from its all-time highs, it is down about 57.86%. But it's only up 10% from the day on this rally. It doesn't seem investors are as bullish on this company as they were with the other ones. So Lucid is more like the Tesla of luxury, right? So they have yet to produce a vehicle, but their first vehicle is going to be the Lucid Air, a sedan that's going to be starting at about 70,000 United States dollars. So this is definitely a higher end model. They do expect to begin deliveries within the next 6 months or so. With the current stock price of Churchill Capital, this would give Lucid a market share of over $30 billion after the merge. This is pretty crazy, especially for a company that right now is not expected to do much sales until 2022. In 2022, they expect to have about $2.2 billion in sale. In 2023, they expect to have about $5.5 billion in sale. So now let me just give my overall thoughts on the businesses. First, I want to take a look at forward price to sales ratio to see how things are trading. We can see, right, all of them have taken a huge dip in price to sales ratio looking at forward 1 year revenue, and that's a good thing. And they've pulled back a nice amount as well after yesterday's rally. And unfortunately, I don't have Lucid here, but Lucid is definitely the highest one, sitting at a price to sales ratio of about 14 right now. Then we have Tesla with a price to sales ratio of 10.4. And I do believe Tesla should be one of the most expensive because it is one that is already producing vehicles and it's hitting many markets from Europe to United States. So that makes sense, right? They're seeing strong revenue growth. They're already profitable. NIO, in the other hand, is a bit lower than Tesla, sitting at about 7.6. NIO, in my opinion, I think should definitely be under Tesla because it has yet to produce as many vehicles and it's not profitable at the moment, but it is growing, right? It has vehicles. I'm actually very surprised that NIO Technologies, for having so many vehicles, for being profitable, for having a strong balance sheet, and for having positive cash flow from operations, has a price to sales ratio of about 2.8. So NIO, like I mentioned, is probably one of my favorite ones, and it's one that's being slept on at the moment. So now my overall thoughts. Out of these four, I actually only own one in my portfolio, and that's NIO. So first, let me say, which do I like the most? To be honest, the two I like the most, even though I don't own it, is Tesla and NIO, because both of them are already producing a crazy amount of cars and have a great market already built. NIO is probably my favorite due to such a low market cap and such a low price to sales ratio. All of them that we saw today had strong balance sheets. They all had strong future revenue growth. Which do I personally think is the riskiest? Out of all the four that we saw today, I think Churchill or Lucid has a strong valuation right now, which makes it super risky because they have yet to produce a vehicle at the moment. And if Lucid can come up with this new vehicle in the next few months, if it does amazing and they start to overall take a huge amount of the market share, I can see this being a very bullish reason. But at the moment, based on the other three that we looked that were already producing vehicles, that were already kind of making money, it makes Lucid one of the riskiest out of them all. To me, the major risk is coming in the overall segment. We know, right, that there's so many EV companies out there right now. Not all these EV companies will survive. So valuation is very important, and deciding which of these we're gonna enter is probably the hardest decisions, because maybe out of these four, not all of them are gonna make it. To be honest, I do think these four already have a kind of strong brand name to them that I can't see any of them really leaving. All right, guys, so that's it for today's episode. But before we head out, let me know in the comments, which one do you guys prefer more? Was it NIO? Was it NIO? Was it Tesla? Or was it Lucid? So take care, guys. Have a good night and see you next time.